Thanks, thanks David and Munya for joining us, traveling all the way here. And before we start the session, how was your experience yesterday with gulab jamun and gajar ka halwa? A fan of Indian food.
You know, it's interesting because I've had what do you call it? Gulab jamun. It's the nerves, I'm sorry. I've had gulab jamun in 3 countries, and the one in Mumbai slaps, as they say. It's very different from anything I've had. I keep wondering what I've been eating in the past.
So, Samir ended his last session saying that there's no sales pitch here. While we have these 2 distinguished guests, one from a private player and one from a government, representing one country. I thought we'll try to make it, a discussion on how Indian fintechs can explore opportunities there. And that's what all fintechs are looking at in our country. At least I know everybody keeps asking us, what can you do for us in Southeast Asia? What can you do for us in Africa? So I just thought, before we get into the discussion, we'll just have some data points here. I mean, I'm not reading it, but now you guys can see what's happening there in that markets. There's so many countries forming, associations between themselves in Africa, and there's huge activity that's happening there. Some countries are actually leading the path. The central banks and the government is initiating sandbox opportunities and all. And then these are some of the areas which are exploding there in that market. So Munya, to starting with you, how is the entire? How should somebody approach the entire African market? Anybody coming from India or any other country, looking for an opportunity there? Because I think as India stabilizes, Southeast Asia and Africa are the next exploding markets, the growth markets. The demography is very, very favorable there. So what should Indian fintech expect there?
A very good question. So maybe I could give you some context in terms of what I do, the organization I represent. I'm the head of growth for EMEA for a fintech called dLocal. We are a fintech that supports enterprise businesses that are looking to tap the next billion consumers in emerging markets, including Africa. We've developed an infrastructure to support over 700 payment methods across more than 40 countries. Why that's important is that Africa is a very, very big opportunity. And one of the key things we always work with our global merchants and understanding is that there has to be a prioritization of which markets are important, where to focus your efforts, where the opportunities are, and I think you've seen some of the statistics in terms of how big the market is. And maybe just talk about one statistic that is, it may not shock you, but 1 in 5 of us will be from Africa by 2050. I'll repeat that again. 1 in 5 of us will be from Africa by the year 2050. So the opportunity is massive. But where we believe we can help any businesses that are coming to Africa is to think about some very, very important markets. I like to call it Kenza, and Kenza would be Kenya, Egypt, South Africa, Ethiopia. I mean, these are all markets that we see some significant opportunities, Kenya included. And so we always talk about looking at prioritization of markets. I mean, it will be, 2 billion people by 2050. So it's important just to think about those markets that have, massive populations, and we're seeing significant population growth. Thank you.
Your thoughts, David?
So 1.4 billion people the last time I checked, and this number keeps growing. But also think India 20 years ago. Okay, so huge gaps in financial inclusion. You have huge rural communities. There's been a lot of growth in access to mobile, telephony. But only 16% of Africans are banked. Okay, it's a huge opportunity. So what you start to see is a lot of innovation that's being developed is mainly towards solving for inclusion. And then, of course, secondly, a lot of remittances, because there's a lot of flight. So a lot of our, you go to school, you leave the country. So much money coming back to the continent. And these are the 2 areas being solved for right now. I was at a table yesterday, and there was a very interesting conversation around medical tourism and how $2 billion comes from Nigeria to India every year, and this is not solved for. So there's a number of Indian companies playing in Africa. I think Aden is one of them, and a number of these facilitating, especially the cross-border rails to an extent. But there's lots of opportunity from, credit rating. Think about the lending business. Today, micro lending is at about 10% per month. So it's 120% per annum on small loans. In some countries, it's as high as 30% per month. Okay? And these are opportunities that are readily available. But the thing is, it's not as easy as just flying to Kenya tomorrow and start a business. The easiest way, the best way to do it is think about partnerships. Now, I wear two hats. On one part, I work with the government, but then I'm also an entrepreneur. So I built a business and got appointed by our president to support how we work with technology innovators. And we see this opportunity every day, and we see very many companies coming in and spending lots of money trying to quickly take off. The best way is to find the right partners with whom you can get into the market. I think Munya and dLocal is a great way, for example, around being able to originate payments and manage payouts as you slowly feed into the market. I seem to realize many of the fintechs in this room, or from what I've been hearing, are really building for the banks. Okay, most of the banks are still running archaic core banking systems. The banks are trying to, same struggles. The banks are trying to kill the fintechs are trying to kill the banks. The government is trying to form CBDCs to be able to support inclusion. So there's a lot of opportunity on the African continent today, but the right way to get in is find the right partnerships, try to work with government agencies as you come in, and find sort of an easy runway into that market.
Yeah, I think that's where my next question is. That's exactly how I articulated it, is right. I think a lot of people, when they think about Africa, it's all about your M-Pesa and Airtel monies and now dLocal. Mostly it's about mobile-driven payment solutions, right? How does this entire integration is happening between the banks and the mobile companies? But on the other side, we being a consulting firm, we have built a lot of projects in Africa that's mostly revolving around either core banking or CBDC and blockchain. So where, how does all this, points meet, and where do you see the opportunity?
You'll find the ecosystem is moving very, very quickly. And, we talked a lot about mobile money. I mean, what's incredible is to also see, in fact, today I just posted something on LinkedIn around the World Pay payments report for 2024, specifically around EMEA. What we're finding very interesting, and I think India can relate to this, is what's happening with real-time instant payments. Example would be Egypt. They processed 1.5 billion transactions in 2024 using real-time payments. It's a system called InstaPay. That equates to about $5 billion, and that was launched 3 years ago. And so we're finding this phenomenal in terms of not just new, interesting, real-time payment capabilities happening across the continent. We're also finding new payment methods. You mentioned CDCs, digital currencies. Most of the big economies across Africa have some digital currency capabilities. But what excites me more so is also what's happening around stable coins, right? So now you're finding, I think Africa alone this year might be about $30 billion of stable coins because of the currency fluctuations you find in markets like South Africa, Nigeria, and Ethiopia. So the ecosystem is actually moving very, very quickly. And this is where we, certainly as dLocal and many other players, play a critical role. What's exciting for me is the government involvement. There's always been a perception in Africa that government wants to be hands-off. But we've seen so many situations, whether it's sandboxes, whether it's fintech associations, where government is now playing a critical role. And that actually is driven by financial inclusion. There are opportunities where government are seeing ways where they can provide these products and services, and it's lovely to be here in India and seeing what you're doing around DPI. It's fantastic, and I think we can learn a lot more around those kind of infrastructure. So, summary is that a lot is going on across Africa, and it's moving at a really rapid pace.
Just to add to that, and I like how Munya referenced the ecosystem. It's important to look at how it's grown. Okay, so initially, the telcos were solving for in-country remittances, sending money back to your village. And because majority of the economy used feature phones, it was all USSD. And it's interesting, to this day, USSD use is still much higher than application use. Okay, and again, even as people start getting applications, you're building apps that are layered on top of USSD platforms and all this. Now, the reason why the telcos are very successful is because they had distribution. So the telco agent was a point where you could cash in and cash out. There's been attempts at building a number of telco-agnostic fintech wallet-type solutions, but these have struggled again because of distribution. The next level is starting to build up a value-added services layer on top of this USSD, basic remittances business, and this has led to the development of a number of mobile applications. So now you're seeing, richer user experiences, aside from simply bill payments to, more interesting stuff, card issuance, and all this happening on these mobile applications. And this was, again, heavily driven initially by the telcos, and then it moved to the fintech entities. But the banks have begun to realize, okay, we need to get it on this. So what the banks are now doing, number one, is, of course, in some countries, you actually have MVNOs coming up, owned and run by banks that are turning into, heavily running the transactional bit of the business. Also, the banks have, insatiable lending capacity. So a lot of micro lending is actually being bank-backed. I think in my country, there's about 30 lending applications. I think across the continent, maybe 1,000 fintechs. And again, primary areas initially was wallets, remittances, lending, and now you're starting to see more advanced services, USD card issuance, stablecoin purchases, investments as well. And of course, there's a lot of challenges from a regulatory perspective because unfortunately, in as much as you have 54 countries, unfortunately, the blocks are not working together. So you have to get licensing in many of these markets. So that goes back to what's the easiest way to sort of start and launch, partner with an existing licensed entity, get your product in, let them initially run the processing while you validate, and then, with success, justify, your own licensing regime depending on the core markets. Just to also add, I think what Munya mentioned around the 5 markets, so Kenya, Nigeria, South Africa, Egypt, I think, is because of the sheer size of the population. So Nigeria is 250 million people, Egypt is 100 million. Kenya is not that big, but then they have a lot more literacy rates, so there's more willingness to adopt technology products. So you need to be strategic on which markets you sort of start with as you try to get into those markets. You have a market like Uganda that's a great validation market, not as big, but I keep saying, if it can work in Uganda, it can work anywhere. They're sort of the hardest customers to adopt technology, right? So you need to sort of have an appreciation of the opportunity and the continent as you think through, your entry strategies.
Excellent. So you mentioned about the banks also launching their own applications and all the evolving ecosystem, right? How is the embedded finance ecosystem evolving there? India is actually deeply penetrated in terms of embedded finance, and a lot of lending is happening actually through those embedded finance networks. So how is that panning out in that markets?
Yeah, so what's interesting is that one of my previous roles, I worked for an international lender. We actually used to provide student loans. And what's fascinating specifically as it relates to Africa is that about 60% of the population still does not have access to a traditional bank account, right? So when you start talking about lending, and this is why I mentioned earlier the critical nature of what government is doing around some of the financial inclusion initiatives. So if you've got 60, 70% of your population without a bank account, what do you do? And so the role of telcos have been critical in the ecosystem because they've been able to provide mobile money. In Africa today, there are 800 million mobile wallets. And so that has become a very, very big driver of financial inclusion. What we've also found is that there's been this merger. I mean, for example, for us at dLocal, we cannot move any funds without banks. And so it's a really sort of a triangular ecosystem where you've got telcos, you've got banks, and you've got fintechs all heavily integrated, working towards financial inclusion. And David mentioned a very good point. In fact, we've got a colleague here, Mercy, who with Britain has now been looking at insurance-based products. And so what you're finding is that apps have become very important. In fact, digital wallets, we actually found in 2023 that digital wallets and account-to-account payments were the only 2 payment methods that increased in Africa versus debit cards and credit cards. Is because you now have the ability to start loading products and services onto a mobile wallet, onto an app, and giving people capabilities of whether it's remittances, lending, you can do that now, you can provide loans, and so you've really driving a lot more financial inclusion by the ability of having some interoperability capabilities with a mobile wallet.
So embedded finance solutions are solving the same problems across the world, right? High cost of tech development, especially at the retail level, and also being able to access distribution. So you're seeing a lot of buy now, pay later type solutions happening across the continent. I mean, my company is an embedded finance solution, so it's no-code websites and payments for tourism, right? So you're seeing a lot of implementations in different industries currently being executed. And I think, and I'm going to say this here, what we seem to see is fintech is not, payments are not yet solved in Africa, right? And this is the truth. The larger fintechs are fintechs of fintechs. At the retail level, there's still very minimal solutions to enable small businesses actively accept payments, because the cost of managing these small companies is very expensive, and those are huge opportunities. And what's happening is that embedded finance type companies are coming in and providing distribution solutions to these businesses, and as such, gradually, pushing that needle. Now, that also makes you think through how much broader is the opportunity, right? Think on the, in-platform settlement to solve, so if I use my company as an example, if you look at the tourism sector, when you receive a payment for a package, you have to settle 3, 4, 5 people. In some cases, you have to make a cross-border payment. While there's so many remittance companies, it still costs about $30 to pay money from one country to the other. Payments origination from, say, Europe and America are still very expensive. So I'll give you a real case scenario. We pay PayPal, I think, 2.9% plus $1, because PayPal almost always guarantees that credit cards from America will work. The challenge is PayPal only settles in Kenya and South Africa. So we have to settle in Kenya and then settle in Uganda. So what typically should be a 2.5, 3.5% transaction is getting to 4.5%. And unfortunately, because of the absence of real solutions, the market is willing to pay for it, because the American customer is going to pay with a credit card, right? So there's lots of opportunity, especially basing on embedded finance, solving sort of retail SME type solutions, blended with, say, for example, stablecoin settlement or origination of some different sort, that can be very viable in that market.
Absolutely. I think this cross-border remittances has not been solved for ages. I don't think it will ever get unless governments get involved. But then, one last question to both of you is, if you have to name any 3 solution providers your country would like to work with, in terms of like somebody building for cross-border remittances or some other technology, what should be those 3 guys who should be looking at your markets as an immediate opportunity?
Yeah, I think for me, what we are seeing is, as I mentioned, there's a lot of activity going on in terms of things like stable coins. So I think that whole infrastructure is very interesting to me. What's been fascinating here, as I've attended the sessions here, is what's going on with AI. I think we've been having a lot of interesting discussions internally on what does AI mean to the Africa ecosystem. And things like access to data. In fact, I know we had a really interesting conversation, Mercy, that there are things that we may not think about, is that maybe your data itself needs to be clean, right? Even before you start thinking about AI, do you have that data? So I think that's another area that I'm particularly interested in terms of what can be done around AI and the application of that across the continent. Then I think the third one for me is that we continue to find most transactions across Africa have a foreign exchange component. When you look at a transaction that moves from Nigeria to South Africa, for example, it's very likely that there's a double FX transaction, which means that you'll probably have the US dollar, you go from Naira to US dollar to South African Rand. And that whole ecosystem itself causes a lot of friction. So we spend a lot of time at dLocal around that. But I think that we should be able to make a lot more efficient transactions where you're not necessarily always having to move from different currencies. I think those are the 3 areas that I'm particularly interested in seeing some breakthroughs. Thank you.
I think it would be wrong for me as a government person to start pointing out companies, right?
Yeah, but that's the whole idea, right?
Could be called a form of collusion.
Or maybe you can leave your number and mail ID and people will reach out to you, I'm sure.
Yeah, so I think what I'd want to do is give you problems that need to be solved. Okay, so I think that's a great place to start. And it doesn't matter what technology you use or what systems or mechanisms you use. The first is the high cost of payments. Payments are very expensive in Africa. Cross-border proximity, this is just very expensive. I mean, I had something yesterday that lending in India can go as low as 0.25%. Lending in Uganda, personal loans are as high as 18%, mortgages as high as sometimes 16, even 20%. The central bank lending rate is as high as 12%. And very interesting that maybe you should all come and invest in Uganda. Our bond market, so 15-year bonds are, I think, about 16.8% per annum. So most of the banks have no reason to do consumer lending or business lending because if you run government's book, you're making a lot of money, right? So solving for payments is important. Security has become very important. I don't know if you had this, but about 4 months ago, there was a fraud case in my country where the central bank paid out $60 million to a fraudster in Singapore that was supposed to be going to a lender. Right? So there's a lot of interest in security right now. Operations optimization, so it's very expensive to run many of these businesses still. And lastly, KYC for SMEs. Right? So KYC on individuals is partially solved because most of the countries have national ID systems, in some cases with open APIs, or they have verification companies you can plug into. But around the SME or business space, there's still a huge gap there. So these are some of the things that should be figured out. But also, I want to make an open call in this case for partnerships. Partnerships at government level. I think from my own office, I'm happy to create partnerships. So can we explore solutions to some of these problems, working with Indian institutions? And this could be right at the top in terms of public sector level, and then, of course, with some of the fintechs in the room.
Thank you. Can I quickly add to what David said? There's another area I think that resonates with me. There's a company called What 3 Words that did some analysis of address verification across Africa. They believe that 75% of addresses are not real, right? So when you say to somebody, and this is why some of the companies, for example, Jumia, that was doing what is equivalent to UPS or Amazon, is that you send a parcel to an address, and the address doesn't exist, right? Or it's Lekki Phase 3, And so when you start to think about the solutions, my request too is that we love partners in Africa, but it's important that we collaborate and understand the use cases that are specific to the continent. Because oftentimes we have great partners coming through with a copy and paste model. Africa is very unique. Even within the 54 countries, there are pain points that are very different from Egypt to Morocco or South Africa to Kenya that must be understood. So that is, I think, for us very important in terms of the partnerships, is making sure people have solutions that are fit for purpose, work with the local companies and entrepreneurs, because they also have incredible opportunities to solve some real problems.
Thank you. I think the time is up, but I'll leave one question for anybody in the audience. Please.
Good afternoon, this is Sandeep Menon. I wanted to just ask you, I had seen APSA and a few other South African and other African banks using a lot of mobile banking, USSD and other technologies. And it still works, I do think, quite well in a lot of ways, very efficient, very friendly with mobile operators. How do you see that? Because in India, different situations are there, different markets have different.
I'll take a hit of that. So it comes down to the type of transactions and content you are sort of running on these applications. Okay, so if you're doing, I will tell you what I use my bank application for, right? I use my bank application, and do not laugh at me. I use my bank application to move money from my bank application to my mobile phone to do transactions. And yet, my bank application has every possible transaction I could do on, like P2P transactions or payouts, they're all there. But for some reason, I find it easier to just move it from that point to that point. Now, it's a very rich application, but I don't use half the services. And that's because, for example, borrowing on the app, say instant cash borrowing is almost impossible. So, of course, maybe I don't need as much of that. But it's just, we're so used, and then you move the money using the app to your phone, and then you use USSD to pay out. I'm not even counting how much money I spend on that because I'm paying in between. So there's a very interesting, it's not literacy, it's just what you sort of are used to. Exactly, you're just used to it and it works, okay? And I can tell you, I was not a very quick adopter to mobile money. It took me a couple of years, but the day I got hooked, that was it. I'm not sure about the Safaricom numbers, but it's billions of dollars transacted on a monthly basis. And Safaricom users are slowly moving to the mobile applications, but they're still using heavy USSD users. And it's just the way it is. So it will change eventually as more value-added services are added to the applications. Of course, the telcos do pay, I think it's about $10,000 a year so the banks, $10,000 a year for the USSD code, and then sort of per session, I think there's a small charge as well. So they're trying to move and incentivize customers to move to the applications, and it will happen gradually. Now, with the advent of the more functional consumer-facing mobile applications, with things like card issuance and more activities, people are starting to gradually use mobile apps more and more. So the banks eventually will benefit from that movement.
Yeah, just to add, David and I are actually quite the same in terms of payment behaviors. I think I'm smart, but I still use USSD.
And he moved from America after 20 years.
Yeah, I still use USSD. It works. It works very well, and it's the same sort of concept I talk about. Is everybody says let's move away from cash. It's very difficult. I think there's a payment behavior that people have, and when things work, they work very well. I mean, we've got some incredible apps, even in Zimbabwe, where they've got a mobile app, and the CEO was saying USSD works, and people like it. And so I don't see that going away anytime soon. But yeah, let's see what happens. But yeah, most of the banks tend to including apps, will continue to see sort of that growth in USSD. MTN, a big player in Nigeria, still has USSD payments, and are still doing pretty well there.
I just want to add around the cash conversation. Cash is still king in many of these markets. When you speak about group savings, for example, it's a very big product right now where you have village groups. They actually get metallic boxes. Those are problems to solve, and they're very fun problems. I think BRAC did a fairly good job at digitizing this. They still put money in metallic boxes, and many companies are trying to sort of solve for that, right? And the thing is how do you gradually move cash out of people's pockets? It's a value system that's not been figured out yet. When I landed in Mumbai, the first thing I told my host is, can I change money? And he said, no, bad rate. Then we came to town. I've kept asking him, can I please change money? And I understand he's not used to carrying cash around to pay for anything. But we are very comfortable having some cash in your pocket because you have no idea when you'll step on someone's tomatoes.
Fantastic. Just to answer your point, right? If anybody can solve African problems, I'm sure it's Indians. You have 54 countries and our 32 states. When we can solve for this, we can solve for your country also. There's a great opportunity, I'm sure, that exists for all Indian startups there. Let's see how we can, expand the market there. Thank you so much. Thanks for joining us.
Thank you.
Thank you. Thanks for traveling. And thanks for joining.
Thank you so much, gentlemen, for joining us. Can we please present them with a token of appreciation, please?